Hey guys, what's up, how's it going? My name is Rob and welcome back once again to the channel. And in today's video, we're going to be focusing on building a monthly Canadian-based dividend portfolio. I'm going to show you guys how I built my portfolio completely from scratch, and I'm going to give you guys some tips if you're a beginner and you want to kind of get started with building a monthly dividend-based Canadian portfolio. So before we get started, I just want to say really quickly that there is a lot of different ways that you can build a monthly based portfolio, and in today's video I'm just going to kind of show you guys my opinion, and I'm going to give you guys a couple different options to choose from. We'll cover a couple different stocks and different types, so we'll go over some things like REITs, we'll talk about ETFs, we'll talk about monthly dividend stocks, and then we'll explore some other different options as well. So we're going to kind of cover a couple different things here, and we'll go through them step by step, and I'll give you guys some stock picks along the way so you guys can kind of get a general idea of what to look for and what stocks kind of fit that category of kind of supplementing and building that monthly dividend income. And if you guys are a beginner, if you're brand new to investing, I don't want you guys to think that this is too complicated. This is really simple stuff, and I'm going to try to explain things from a really complete fundamental and beginner's perspective because I like to help people who are new and to show you guys that this isn't really super complicated stuff. So if you guys are brand new to investing, just understand that you don't have to be an expert. We're going to cover some really simple options that you can use if you're just getting started, and we'll explore some different options if you guys want to kind of explore a little bit and maybe pick your own stocks and kind of build your portfolio yourself. Now, when I first decided to make this video, I kind of was thinking about how I should target the video because there's a few different ways that you can build a monthly dividend portfolio, and depending on where you are in your life, you kind of want to kind of structure it a little bit different. So I'm going to kind of try to make this video geared towards people that are kind of in the middle. Maybe you're kind of like myself where you're not close to retirement, but you're not super young either. You're kind of just in that middle zone where you're kind of growing it over time and you like the idea of passive income, but you know what, you still want your stocks to grow at the end of the day. So that's what we're going to kind of focus the video on. So obviously if you're going, maybe a little bit closer to retirement, you might focus more on building that yield and less growth, but it's really up to you guys how you want to structure this. So I'm going to talk about that as we go through these different types of stocks and whatnot, so you guys can get a good idea of that. But just understand we're kind of approaching this from a balanced perspective. So when it comes to looking for dividend stocks, if you kind of want to have the balance, there's three things we want to focus on. The first thing we want to focus on is growth of the stock itself. So this would be the stock growing over time. If you buy the stock for $10 and then a couple years later or throughout the year it grows by a couple dollars, you're going to get stock growth, and then you can either sell them or do whatever you want. And even though when you're building a monthly dividend based portfolio that's going to get you monthly dividend income, you still want to build a portfolio that's going to have growth, because over time that growth really does add up at the end of the day. Now the second thing you want to look for is the actual monthly dividend income. So this would be like the dividend yield or something like that, like how much of a yield are you getting on a regular basis. Once again, depending on where you're at and what you're looking for, you might choose a higher yield than somebody else, but just understand that a higher yield does mean more dividend income, but it doesn't mean bigger long-term returns. It's something you always have to consider. And the third thing we're going to look at is the dividend growth. How much is the company growing their dividends over time and in terms of annual increases and whatnot. And it's a really important thing to look at, especially if you're a monthly dividend investor, because you could buy a stock today and then let's say next year they grow that that dividend by 5%, 10%, and then they do that over the course of 5 to 10 years. It can make a big difference, especially if you're reinvesting your money. So those are the three things we're going to look at. Those are the three things to kind of pay attention to. And before we get started here, let's jump inside the number one stock we're going to look at, and this is going to be REIT-based stocks. So REITs are really handy because they kind of do give you that monthly dividend yield, and they do have a higher yield. So let's take a peek at some REIT stocks, and let's talk about some popular ones to give you guys an idea of what to look for. Alright guys, so let's talk really briefly about some REITs here. So the first stock we're going to talk about is RioCan, and this is one of the biggest REITs in Canada, and this is actually one that I invest in myself. So this is a good quality REITs. They have basically trading at $22, almost $23 Canadian, and the ticker for RioCan is REI.UN. So you can punch that into Simple Trade or whatever platform you use to buy stocks if you want to buy the stock. You guys can see that REITs are kind of interesting because they don't have a lot of growth in terms of stock growth, but they do have high dividend yields. And RioCan recently got their dividend yield cut a little bit, so just understand that, but they usually kind of hover around that 5 to 6% range. They are definitely higher, and most REITs will pay monthly income. They will give you a monthly dividend income, so it's a nice little way to add a little bit of extra income inside your portfolio. And since the pandemic, a lot of these REITs got pushed down, so I still think they're kind of in recovery phase, but they're still good to buy right now. And if you go on RioCan website, you can see all their different properties that they hold. But basically, if you guys are brand new to REITs, they basically own different properties in places around the world. So if you go and you see like a Loblaw store in a mall, or a Canadian Tire or Metro or Shoppers, Ryokan owns like properties like that, and if you buy into the stock, you're basically getting the monthly income, some of the rental income that these companies pay to basically run their business. And that's basically how Ryokan works. So you'll get like retail, you get residential income, and all different kinds of things like that. So it's a nice way to get into real estate without spending a lot of money. And Ryokan is definitely one of the best stocks. And if we go inside my portfolio here, I'll just give you guys a quick little update. So the two big REITs that I hold inside my portfolio are H&R REIT and Ryokan, like I just mentioned, and this accounts about 15% of my portfolio because I do like to diversify into the REITs. And I also do like the monthly income growth that the REITs give me. Now, I only have 15% of my portfolio because I don't want to put too much into the REITs because I do want growth in other things as well. But I like to hold a little bit of percentage of my portfolio inside REITs just to get that extra income and to have the diversification. So once again, it's up to you guys how you want to do it, but REITs are definitely a good option to get started with increasing that monthly income. The second type of stocks that we're going to take a peek at are going to be some bank stocks, or these are kind of more stable quarterly dividend stocks. So I know we're building a monthly dividend-based portfolio, but just understand that even though we're looking for monthly dividend income, quarterly income helps too. And some more of the steady stocks, more of the good quality stocks actually pay a quarterly dividend. So basically what that means is every 3 months you'll get a dividend payment. But keep in mind, if you do build your portfolio, you have some monthly payers, you have some quarterly payers, and a lot of stocks, like the different quarterly payments overlap each other. So there are different months and whatnot. You'll still get that monthly dividend growth. It's just some months will be a little bit higher than others. So that's an important thing to consider. Just once again, depends on your goals. If you need more income and you want higher yield, consider investing into some stocks or some ETFs or whatever it is, or some funds that give you that higher monthly yield. But if you're okay with getting some quarterly payments, I highly recommend that you guys look at some stocks like some of the big banks and whatnot, because even though they do pay quarterly dividends, they can really help increase that dividend yield, and they're good quality investments. So don't be afraid to put quarterly paying stocks into your investment portfolio because at the end of the day, they're really, really good companies. And to give you guys a good example of a good quarterly based Canadian stock, we're going to talk about TD, as it is my favorite bank stock. So TD currently uses the ticker TD on the TSX if you guys want to look it up, and it's currently trading at $84 Canadian. And you guys can see just the tremendous growth from these bank stock companies, a lot of the good finance stock companies. And even though, like I mentioned, it does pay a quarterly dividend, if you combine that with some monthly dividend stocks and some ETFs, it will help balance things out along the way. And these companies have just been doing really well at growing, not only in terms of stock growth, but also good dividend growth as well. You guys can see the yield here is about 3.75%, so just under 4%. So it's got a decent yield. And you guys can see that the biggest benefit of some of these bank stocks is the growth of the dividends. Remember I talked earlier about how dividend growth is so important. Here's a little graph of TD basically increasing their dividend over the past 20 years. You guys can see it's just phenomenal increase, and this is the dividends growing about 11% on an annualized basis. So over time, that really can add up, and it really does make a big difference. And inside my portfolio here, I currently hold a good chunk of TD, and it's done quite well for me. And I do hold a lot of other quarterly stocks here, as you guys can see inside my portfolio, like TELUS, Manulife, Fortis, Enbridge, CNR, Alimentation Couche-Tard, and Algonquin Power Utilities. These are all quarterly dividend stocks, and they balance out with some of the ETFs that I have that pay a monthly dividend yield as well. And the third type of stocks we're going to take a peek at are going to be just good old solid monthly dividend stocks. So these are kind of limited in the sense where you're not going to get a lot of stocks that are individual stocks that pay a monthly dividend. There is definitely a lot of them out there, but even on the TSX and in Canadian companies, there's not a lot of, I would say, some of the better quality Canadian companies that pay a monthly dividend yield. We talked about REITs previously, as you can explore some of the REITs and whatnot if you're looking for that. And there are some other companies here, and I'll pull up a little list here that I took online. I just did a quick little Google search, and you can see this list of the monthly dividend stocks. So if you're looking for individual stocks, you can kind of take a peek off this list. But if you're really looking for that monthly yield, I would highly recommend that instead of looking for some of these stocks, you could definitely add some of them in your portfolio if you like them, but maybe explore some ETFs. And that's going to be the next thing we're going to talk about, because ETFs will allow you to buy basically any stocks you want, or any of the big stocks in Canada, and still get a nice monthly yield. So let's take a quick peek at ETFs, and let's see how those can really benefit building a monthly dividend portfolio. And last but not least, guys, we'll talk really briefly here about some ETFs. Now, ETFs are basically little bundles or little basically baskets of stocks that you can buy. And you pay a little bit of a management fee. So there's the management fee, or the MER, that you pay for each ETF. Generally speaking, you want to look for a low price management fee. And a lot of them, you can find a lot of them that pay a monthly distribution. So the one we're going to be taking a peek here at is VDY, and that's the one I hold, and I like to be transparent with the stocks I hold, so we'll use this as an example. But you guys can see it currently has a yield of about 4%, just under 4%, and it is paid monthly. And if we look at the holdings for the fund, like I mentioned before, in Canada we're really limited on the quality of stocks that pay a monthly dividend. But if you buy some of these different ETFs, you can get all kinds of the quarterly paying stocks, quarterly dividend paying stocks, and get a nice monthly yield. So this one focuses a lot on finances and energy, and those are the two big things. And the stocks that are inside this one, we can see is RBC, TD Bank, Bank of Nova Scotia, Enbridge, BMO, TC Energy, Manulife, Bell. So these are all quarterly paying dividend stocks, and they're good holdings, but now we can get them wrapped inside an ETF that does have a monthly yield. So if you're looking to add, kind of invest in more better quality, safer stocks, then you can definitely take a peek at ETFs, and they're so simple to buy. You literally just go on a platform like Wealthsimple Trade, you punch in the ETF, in this case it'd be VDY, and you just buy the share. It's as simple as that. And here's VDY. It's the main ETF I hold inside my portfolio, other than VFE. And we have 223 shares, and it's done pretty good for me. And once again, it does pay me a monthly dividend, and I've just been kind of growing it over time. And it's a very, very, very simple way for anybody who's a brand new investor to get started with a dividend investing. Definitely take a peek at ETFs if you're brand new. Now, the other option for ETFs is you can explore is some covered calls, and these have gotten a lot of attention because of the fact that they have super, super duper high yields. So these ETFs basically sacrifice growth to get a higher yield. So if you're closer to retirement, or if you want more of a passive income and you don't really care about the growth as much, you can definitely take a peek at some of these ETFs. So this is ZWC as an example, and it's got a yield of 7.2%, which is pretty crazy, and it is paid monthly. So if you go to the fact sheet here, you can see some different information about the fund. But again, I want to highlight the big fact that these ETFs don't have as much growth. So over the past 3 years, it only has 5% growth, which is relatively low. So not tons of growth, but tons of dividend yield. So once again, if you're looking to grow that dividend yield, you could think about adding some of these higher ETFs, or to have a certain percentage of your portfolio. Just understand that they do come with risk, and you are sacrificing a little bit of growth by doing so. But again, it depends on your goals and depends on where you're at and really what your purpose is of your portfolio at the end of the day. Before we end this video, I'm just going to kind of touch up on here and give you guys my results after investing in my portfolio, just to show you guys that over time monthly dividend income does add up, and we're taking more of, once again, a balanced approach. We're kind of exploring growth plus dividend income growth. So I'm going to show you guys a graph here. We'll go over our dividends, and I'm going to go over the total return of my portfolio so you guys can see just a general idea of how growth plus dividends and whatnot really does help your returns grow over time, even if you're looking for a monthly dividend portfolio. So let's take a peek here, let's check it out, and let's see how my stocks have done. Alright, so here's the fun part of the video where you guys can see how much the dividend income inside my portfolio has been growing. So we started this portfolio in January of 2020. That's when we made our first deposit, and we first started growing it. And fast forward all the way down to month number 18 or month number 19, which is July. We're in the early stages of July. You can really see how this portfolio has just grown in terms of monthly dividend income. And again, this is a combination of some monthly dividend ETFs plus some quarterly based stocks kind of mixed in here. But you guys can just see the growth. It's been pretty consistent, and our total dividend income is 711. And I know that doesn't sound like a ton, but it's really starting to add up here as it's starting to grow and compound. And I got this cool little graph here that's going to kind of show you guys in a better example of how this money has really grown. So once again, it doesn't seem like a lot of money, but over time, these dividends and the regular deposits will continue to grow, and you guys can just see like some months are a little bit higher than others, right? Because we have those quarterly dividend stocks, but we do see these big trending upwards, and it does help kind of grow that monthly yield. And once again, if you want more monthly yield, just pick some stocks that have more monthly dividend income. But this is just basically how my portfolio has done. And let's take a quick little peek at the all-time growth of the portfolio to really see how well it's done. go back into Wealthsimple Trade once again, which is where I buy and hold all my stocks, we can see here that we have a total portfolio of $36,000, almost $37,000, and it's split between two accounts here. We have the personal account and the TFSA, but one thing I really want to highlight here is we're just going to take a peek at the TFSA since it's the oldest one we have, is the growth of the portfolio over time in terms of dividend income, dividend growth, as well as stock appreciation. So over the past week, the portfolio is up 1%, which isn't very much. Over the past month, it's up 2%, but over the past 3 months, it's up 6%. Over the past year, it's up 20%, and all time we're about 19% of the portfolio. So I showed you guys that we had $711 in dividend income, but look at this growth. 4,000 over, like whatever it is, the money difference there, it's like a little bit over $4,000 in terms of stock growth. So growth for me, if you can kind of sacrifice a little bit of monthly income to get growth, it does make a big difference, especially if you're younger like I am. But once again, guys, it really does depend on what your goals are. But I just wanted to show you guys how, stock growth plus dividend growth really, I think a combination of the two is really what adds to some good solid returns as your portfolio grows. Alright guys, so that's it for today's video. Hope you guys enjoyed it. If you guys did enjoy the video, please sure to give it a big thumbs up and subscribe to the channel if you guys want to be notified when I do these videos and get updated. So let me know what you guys think in the comments. If you have any questions, take care. I'll see you guys later and have a good day.